Why might a business experience cash flow problems? Last year, this client of mine had less revenue, more cash, and higher profit. I'm about to show you how. Your business is likely bleeding cash through 5 different holes. I'm about to show you what those are. By the end of this video, you're going to know the 5 triggers draining your cash and 3 fixes to solve those. I don't know what it was about last year other than we've just created a lot of fiscal responsibility in a lot of the clients we work with, but we saw a record number of clients who actually decreased their revenue but increased their cash balance average and increased their profitability. So it's possible to actually go through. I'll never forget, the first ever client we saw do this was early on in our business, and in 1 year they were generating $8 million in annual revenue. And the next year they dropped $1 million, only generating $7 million, but their net income went from about $70,000, believe it or not. So the net income on that first year, around $8 million, was like around $130,000, is really low. The next year, he was able to get his net income only at $7 million of revenue up to $400,000 of net income. It's crazy, dropped in revenue, but increased both his cash balance and also his profitability. There is a way for you to do that. You know what that also means? It means you're not working harder, making less. I know a lot of you feel that right now, and that's what's causing this cash flow pinch. So what I want to do is I want to think through 5 triggers. These are the triggers that get pulled a lot of times without our knowledge that start to descend our business into these cash flow problems. So let's talk about trigger number 1, and that is the speed of receiving and paying your cash. So trigger number 1 is all about speed. We had at our house, we needed some roofing work done. And so I called one of our team members who actually advises a roofing company. He said, hey, they're not available, but there's another one in this networking group I'm in. I'm going to pass you on to them. And so I reached out to them. They came over and we ended up signing an agreement with them for them to come replace the roof. And so when they came and replaced the roof, I said, hey, I'd like to go ahead and pay you now. Get that. I'm the customer. And I go, I want to give you money right now. And we were talking on the phone and he said, I just need to come over and get a check. I'll swing by there. And I said, whoa, hold on. And I was being a little bit punchy with this. You're going to spend 30 minutes to drive to my house, 30 minutes to drive back just so you can pick up a check, even though I'm willing to pay you right now. I want you to think about the time, the money, and the expense that it took him for that 1 hour to come pick up a check versus if he would have just taken my money by a credit card right then and even ate the 3% fee, he'd have gotten his money right there. And you know how long it took me to get the final check to him? 2 months. Not because I don't want to pay him, but I had to be at my house at the same time he had time to come pick it up. Took him 2 months to get his money. That's ridiculous. It's not because me, the customer, wasn't willing to pay. I wanted to pay right away. I don't like owing people money. It's that he had not set up a speed of being able to get his money through a receivables process. So how do you do this? Simple. Automate your receivables. You need to be accepting ACH, credit card, any possible way of automation you can. But the fees, you're likely going to write off more money in uncollected receivables than you would in fees. And not only that, but you can appropriate your pricing. Make sure your pricing fits in so you bake some of those fees in it. And in some cases, you can even offer a rebate for people to pay immediately through ACH and credit card. Get creative with the speed of getting the money into your business. The faster you can get the money into your business, the more options you're going to have. Now, Payables works the same way. If you let your payables stack up over time, you're going to end up writing huge checks that you're not going to have the cash availability for, which is usually what spawns us to have to go to the bank and getting a revolving line of credit or hard money lending or whatever. Our back's against the wall. Rather than us just having a steady drip of payables, we put ourselves against the wall so that we got to go borrow other people's monies for the payables. Payment speed is incredibly important as it relates to a trigger that causes cash flow problems. Trigger number 2 is sort of in line in that, and that is you're growing sales, but it's this sales expense divide. And so you're growing sales, but your expenses are growing faster. What usually causes that? Because you could think, well, if I'm growing sales, then should my expenses be growing in line with that? In many cases, that's the case, but here's the problem, is we're dealing with ourselves, we're dealing with our teams, and we're emotional. And a lot of times when we add the fuel of sales, remember what sales is. Sales is gasoline to an already burning fire. If that existing fire is out of control and you add sales to it, it's just going to become more out of control. But if it's a controlled burn with understood numbers, you know your numbers, you know your expenses, you know your revenue, we've got a RAGE acronym that you can use, R-A-G-E. You ready? Revenue, actual cost, that's cost of goods sold, gross margin, that's your revenue minus your cost of goods sold, that'll give you that number, and then your expenses. If you know those numbers, then you're going to do a better job of keeping your expenses in line with these new sales. But if you're hidden from those numbers, don't even know a ballpark around those things, or you just go, hey, my CPA or bookkeeper deals with all that, then you're probably not ready for more sales. It's just going to increase your cash flow problems. All right, trigger number 3 is when your cycle times, I'm going to put a clock up here, your cycle times are not aligned. So it's not just that your expenses are outpacing your sales, or you've got a lack of speed of getting money receivables or letting it stack up on payables, but your cycle times are actually out of control. So this usually works a lot with people that deal with purchase orders or people that deal with long-term 30-day, 45-day, 60-day payables. And so what happens is you put a 30-day term on somebody to be able to pay, and it takes them 45 days to be able to pay it. Is it because they couldn't pay it? It's usually not the customer's fault that they don't pay. Usually, not always, but it's usually our fault that we don't properly communicate to follow up. So we send the invoice and just let it sit. From now on, in order to increase speed, whatever your terms are, 24 hours, 7 days, 30 days, 60 days, 1 minute at the time of transaction, I don't care what it is, you need to communicate your expectations and then set moments for follow-up. Do not take the mindset that says, well, I sent them an invoice and they just didn't pay it. They owe us. No, what we need to do is go, hey, the terms are 30 days. What I'm going to do is send you the invoice. And if you haven't paid within 10 days, you're going to get a reminder. And then 7 more days a reminder. 2 more days a reminder. Last day a reminder. So if you don't pay us, you will get reminders. I just want you to be aware of that so that we can ensure to get paid by that 30 days. It's very important for us to have proper cycle times to be able to do that. You need to communicate that in order to speed up your cycle times to get this money in. Because as long as money is out on the street and not in your bank accounts, you do not have options, and it increases your availability to have to go borrow money from hard money lenders or the banks, proverbially putting your back against the wall, and you don't want to be there. There's a 4th trigger that a lot of times causes these cash flow problems, and I'm going to put this in a version of a popcorn bucket. So just imagine this is a big movie theater popcorn bucket, but I'm going to put holes in the popcorn bucket down here, and I'm going to spill a little bit of popcorn right here on the floor, all right? So we've got this visual now, it's a big popcorn bucket. Trigger number 4 is that your bucket is spilling popcorn. What do I mean by that? Most businesses are running their business from 1, 2, or 3 bank accounts. And it's like a big bucket of popcorn. We take all the popcorn, all the money, and put it into 1, 2, or 3 big buckets. And so when the popcorn's in there, I don't know what that money's for. Is it for overhead? Is it for rent? Is it for a new truck? Is it for reinvestment back into the business? Is it profit? Is it tax? Is it cost of goods? I don't know what it is. But when we take that one bucket and we subdivide it into multiple buckets, 7, 8, 9, 10 buckets, now all of a sudden we can distribute a lot of this popcorn into smaller buckets. So I'm going to create some smaller buckets over here. Sorry, I'm not a super good artist. And we're going to put popcorns in these buckets. Well, now I know this bucket is for profit. This is for cost of goods. This is for operating expense, tax, debt reservicing, whatever. And so many of the businesses we work with have 6 to 10 different bank accounts. Believe it or not, a record holder has 53. And it creates a ton of clarity. That might sound overwhelming to you. I promise, once bookkeepers get a hold of this and understand it, they do not let it go because ultimately they have clarity of where the money's going. But the 4th major trigger of businesses experiencing cash flow problems is that their cash is flowing, but it's flowing out of the business. And it's falling and it's leaking. Scott, how does it leak? Well, you know that car you bought through the business? The business didn't actually need that car, but you ran money through the business. You know that lunch you paid for through the business and all these other things? What about the subscriptions that you don't even know you're paying? There are a variety of different things, and not only that, but fraud happens within business. Things get leaked out. Money gets spent on things that it should not be spent on. When it's all in one big bucket, you're not aware of those little things. But when it's subdivided in smaller buckets, now if $1,000 leaves this bucket, you don't know it. But if it leaves that bucket, you're profoundly aware of it. So it allows you to know where the money is. Now the 5th trigger is one we actually get a lot, but we try not to make people feel bad about it. But it's this big question mark, and they just ask, I don't know, my CPA handles that, my bookkeeper handles that, my accountant handles that. Listen, it is their job to help you transact money. It is not their job to be the ultimate decision maker, to fully understand the fiscal position of your business. That is your job as an owner to be able to do that. The moment you abdicate that responsibility, not delegate the task, you can delegate the task, that's fine. But when you abdicate the responsibility of knowing the fiscal health of your business, you are setting yourself up for cash flow problems, and you don't have to do it. So here are some solutions to be able to solve these 5 triggers that I've talked about. Number 1, subdivide your bank account. Take this one bucket of popcorn, 1, 2, or 3 accounts, and turn it into 6, 7, 8, 9 different accounts. Capital expense, operating expense, tax, profit, cost of goods, all of these. So every receivable that comes in, we can cut those up and put them into their separate homes. And so now we have radical clarity on where each one of those cash dollars is going. Another solution is you can start to set hard and fast terms on money going out and money coming in, more importantly. And so the speed of that by automating that, and then also the timing of making sure your cycle times and your terms are on point. The third thing you can do is just on a simple spreadsheet. You don't have to buy expensive software. Just set up a tracking dashboard, tracking what we call your ABCs. Accounts, bookkeeping, receivables, payables, and customers. And to do that, I've recorded a great video that I think will be super helpful for you. It's how to solve cash flow problems in a small business. And so if you'll click on the link of the video below, it'll take you to that video so you can walk step by step through that. I would encourage you to have some of your team members there, maybe your accountant, your bookkeeper, so you all can build this together. Now, I will tell you up front, some people are going to be hesitant to this, but I can promise you, if you'll do this, you will have radical clarity as to the numbers and the money in your business that will help prevent some of these cash flow problems so that you can be liberated from cash flow chaos and make time for the things that matter most.